Bible can only be one Bible. And at last, the Bitcoin become the Bible. Its expectation tell people that the finance will be changed in the next several decades. And this is kind of success, at least two narrative, like 2000 years ago, the Bible preaching in the market, right? But after the preaching period, you have to move on to the practical period, which is the second growth curve. You cannot just tell the story, make the narrative, do the Ponzi, and collect the bubble. You cannot do that, right? There must be practical, down-to-earth, real-world things.
And looking at specifically, we're going to show on the B-roll, we'll pull up a diagram of how Cicada works specifically. And visuals, I love visuals. And the base of it, and I really want to ask a question around, what is your particular stance on someone who invests a good bit in the place that Bitcoin serves long-term in the market? Is this something where you guys chose as like one of the first, yield, is Bitcoin mining is one of the first yield generators? Is it because it just has adoption? Do you think it's because of the design? Do you think, universally it's just the first move advantage? Like, how do you land on, like, say, Bitcoin mining and the income that it generates as, say, the building block versus, a Cicada yield?
You mean, what is the most important thing about you, right? And
Yeah,
when you choose that.
and how you come to Bitcoin as that, and like, are you guys looking at like other yield generating base?
Yeah, okay. And well, for the last cycle, as we mentioned about, it's the first growth curve, which we stand on the consensus of expectation and narrative. Bitcoin become the king, right? Bitcoin is the only one. Why is that? It's because Bitcoin is the only consensus that can last long. And it is the target, because the expectation is at least for now, people believe that it's the future gold, is the digital version of gold, right? And so it is the biggest consensus. And according to the last 1 year, we find out that many of the altcoins actually goes up and down over there, but Bitcoin actually maintain over there. And many of the sovereign funds and government finance actually invest Bitcoin. That means that they have got the characteristic of a future version of a gold, right? But this is the only last cycle. And I mean that all of the other consensus, actually, they lack of the real yield and the underlying asset and the real practical over there, right? I mean that Bible can only be one Bible. And at last, the Bitcoin become the Bible. Its expectation tell people that the finance will be changed in the next several decades. And this is kind of success, at least two narrative. It's really like the like 2000 years ago, the Bible preaching in the market, right? But after the preaching period, you have to move on to the practical period, which is the second growth curve. You cannot just tell the story, make the narrative, do the Ponzi, and collect the bubble. You cannot do that, right? There must be practical, down-to-earth, real-world things. So this is the point. After Donald Trump, we have to move on to the next cycle, which is how we can make the work, make the value, put into the Bible, make it down to earth. This is very important. So this is the second curve, beginning of the second curve. Many people don't want to drop off their cards on their hand and move away from the table just because they still work in a casino, right? Yeah. But now it is not that day. We cannot stay there and wait for another need, right? Why we talk about Nigeria things? Why we talk about India and Bangladesh things? I mean that the real practical things grow faster than we thought, and we have to move to their part. And this is about yield management, and we will move to that part. So for this year, actually, we'll put many of the attention, spirit, and time on this. And the yield over there actually is always the first concept. I mean that you have to follow people's need, demand, requirements over there. I mean that they want to pay and use the crypto easily, convenient. Right? And on their side, they need the growth of the yield. So once we make the risk management and the evaluation to the asset, we will go back to some things very similar to the Wall Street, the traditional finance. Similar, but paradigm shift. I mean that for the yield, we have to focus on the underlying asset is solid, substantial, real thing, and sustainable, long term. It can be proved for very long term. The depth is very deep, and the risk is low, high Sharpe ratio, and low friction, regulated. All of these characteristics still are points that we have to focus on. But the paradigm is different. It's not like the traditional way because we live in 2025, not 1925, right? So there will be hedge fund. There will be AI-driven hedge fund. And AI-driven hedge fund actually is totally digital. And you can calculate all by traditional accounting and then convert or mapping to the crypto things. And this we call this Oracle. And you've done this work well, like Chainlink do that. And we can move directly to the Web3, yield generated, yield bearing, and asset management. So this is about the details we have to do on this cycle. So it's very important that the detail in Cicada, we have got 5 steps. The first step is to find out the real yield asset and sustainable, all of this characteristic. The second point is that we have to prove, no matter in the Web2 TradFi, but also we have to make mapping to Web3, which is validating Oracle and convert them to on-chain. Third one is we have to build refined protocol over there. I mean that you have to design the protocol in a good way. I mean that the Cicada is like a rebalance system. From one side is a liquid token, the other side is a rebase token. And this actually is a rebalance things. And it's a very, very rational and a very useful protocol that we can pump up the yield to the market. And there will be a lot of other kind of protocols. For example, like Pando have already proved its success. So all of this protocol will happen and will become the connection, the joint, the bridge between the yield and the liquid. And the fourth point is liquid. We have to build up liquidity. This part is a little bit different. I mean, the paradigm should compare with the TradFi because liquidity will happen very late in the traditional finance. But on the contrary, actually, Web3 is totally different. Liquid comes on day one. And I mean, the liquid actually, you have the token, you have pump fund, you can make the liquid.
It comes quick,
Yeah. Last night, actually, we've got a party, and here's a guy make the party pump fund, the token, and then everyone buy it directly, goes up. This is new finance, right? So this one, liquidity part actually is different. It's faster, more flexible, totally different from traditional finance. And we know that there's DEX, ZX, and DEX, DX. And so there are different variety of ways of liquids. So part is different from traditional finance. And the last one, because the liquidity is different, so that the derivative is different. I mean that derivative actually, before we just know some future, LC, and options, some kinds. And we can make some of the combination and permutation together to all of this derivative. But you know that in Web3, actually, derivative is just like a logo. And you can put it all together like it's like a gaming thing. And I wrote an article is about the circuit of finance. It means that each of the units inside of finance is just like the circuit, and we can put it together. All kinds of permutation and combination will happen, and the derivative will become very super different from traditional finance. So this is the 5 points, and these 5 points will happen, explode, booming inside the crypto, and this will happen very fast in the last several years. Next several years.
And you feel like, and it sounds like the timing's right too. Like if you're coming a place where the Melee Libra token, the Trump meme coin, things that felt very extractive, and it's like, hey, let's go ahead and rip the Band-Aid off, as you know, as like the saying goes, and let's go find like real yield. So what is the best way for like our listeners, our audience, like to follow Cicada, to get involved, to reach out with you guys, to you guys, to work with your protocol?
Actually, we just provide a protocol and we give a launchpad and marketplace. And there will be a lot of different kind of asset. At first generation and at first stage, actually, we will help to launch the best asset, and we will become the asset evaluation platform. And later on, this will become an open platform that will be voted by the community. There will be vote tokens, and it is a decentralized native way. Really similar to Polkadot, and there will be a validator, and it will vote for all of the things, asset. And what does it mean of the protocol asset management? Because it means that protocol is the law that make the evaluation, buy and sell, all of this detailed, all of the actions to the asset management. So this is a new system, and we, Cicada, provide the system, and it becomes the new pump to pump up the yield from the real yield world and to the market. So this is a channel, this is a bridge, and people can use this protocol and to find out new things. And also there's a lot of the details in it, including DAOs, including markets, including market making things, and including that there will be derivative you can invent yourself, and you can bring more asset combined together. So there will be a flexible logo after that. And then that from the last cycle, actually, I didn't mention LSD to now. LSD is a good thing, although there are some of the negative points for LSD. I mean that there are too much LSD over there. But LSD is a good idea because liquid stake tool derivative is a very important innovation to the financial system, to the innovation. And of course, our LYD, which means liquid yield derivative, will get some of the advantage from LSD, develop it, and will deliver the people that Cicada protocol to use this platform to create new derivative, but with real yield, sustainable, and long term.
Yeah.
Yeah.
And that's the thing. It's there's going to be a lot of cool things that people could build with like liquid yield derivatives. But really, we're at a point right now that it's like very important for the market, very important like to cross the chasm, to have a good basic understanding of like, let's get real yield. And for you guys, like having the ability to go to a protocol and say, hey, this is how it should be built. We'll let the market decide. But as education increases, people are going to say, hey, like we want to know where this yield's coming from. We've seen enough fully, low float, high FDV tokens. We've seen enough bad finance that we want good finance.
Yeah.
Well, Gary, it's been a pleasure speaking with you. I know that
My pleasure too.
you're super busy traveling, writing. What's the best way for us to follow you?
Yeah, I've got Twitter. My name is Gary Young over there, and actually I've got a lot of space over there.
Okay.
And I used to talk about traditional venture capital investment and also history, macroeconomy. Now most about the new things because we're now on the turning point of the new generation. So I talk about the crypto and the DeFi thing.
Yeah.
Yeah, welcome you.
Yeah, our audience loves, especially bringing in macro insights into how you come to an investment decision or, why you build something. So, Gary, it's been a pleasure. And I'd love to have you back.
Thank you. Thank you, Jody.
Thank you.